free and fair market based upon rules should be built. I and President Trump has confirmed on our strong will to do so.
It's probably just going to be more of the same for Japan, in and out of recession over the coming years. Stuart Allsopp, BMI Research. The Prime Minister of Japan met with Donald Trump to discuss future bilateral trade deals between the two countries. So, Stuart, subsequently, are you expecting this meeting to be the key driver in any US dollar-Japanese yen movements this week?
I don't really expect it to be a main driver. There's so many other forces going on, so many other forces at play at the minute, that I wouldn't expect that to be one of the main ones. I think that, if anything, it should probably cause, if anything, a little bit of weakness in the yen. The reason being that usually in times of global risk aversion, the yen will strengthen, and in times of risk-seeking behavior, the yen tends to weaken a little bit. And I suppose the reduction of the threat of deteriorating relations between the US and Japan is positive for the Japanese economy and global risk-on sentiment. So, if anything, it should be yen negative, but it's not something that we're looking at as a major driver of that currency pair.
Data released today shows Japan's economy grew for the fourth consecutive quarter, led by strong exports. So whilst observing this data, has this confirmed that Japan's economy is back on track?
Yeah, I wouldn't say it's back on track. I mean, there's a lot of positives to take from the data. I mean, the export sector is clearly shrugging off a lot of global weakness, and even is showing that even in spite of the increase in oil prices, net exports is still a major contributor to growth. Having said that, I think this 1% growth figure is probably going to mark the high watermark of growth over the coming years. I think it's very unlikely we're going to see an acceleration from here. A couple of reasons for this. One is that Japan's economy is becoming increasingly export dependent at a time when global trade is facing increasing downside risks due to growing protectionism out of the US mainly. And given that the US and China are its two major export partners, that poses a downside risk. Another factor is there's upside pressure on interest rates, and the Bank of Japan is trying everything it can to keep yields very, very suppressed. But the market forces clearly suggest that interest rates should be higher. And if market forces overwhelm the BOJ, then you could see a sudden rise in interest rates that could cause quite a bit of disruption across a lot of the interest rate sensitive sectors of the economy. So I wouldn't say that this is, I mean, it's a decent growth figure. It's, it's certainly marks an improvement from, the recession we saw about a year ago, but it's probably just going to be more of the same for Japan in and out of recession over the coming years.
A key data released this week is China's inflation rate. Earlier this month, the PBOC surprised markets by raising the short-term interest rates. So, what signals are you expecting from China's inflation figures? And could they give any indications of any future PBOC moves?
I don't have a view really on what the figures are going to be this week, but what I think the policymakers they're kind of caught in a bit of a difficult situation, because on the one hand, they want to prevent speculative excesses from building up, and I think that was why they hiked that particular rate previously. On the other hand, they are very wary that the economy is slowing down, and there's a huge debt bubble that's kind of over hanging over the head of the economy, and further interest rate hikes are unlikely to cause disruptions for the heavily indebted sectors of the economy. So it's going to be a very, very difficult balancing act. And we think the most likely outcome is for them to allow further currency weakness as a means of sort of easing policy to kind of prevent the economy from weakening. Because I don't think they want to cut interest rates, and that would allow the debt bubble to grow even further. So it's a very, very complex situation right there. And the only real core view we have on it is that this is going to mean that the yuan is going to continue to sell off and underperform the emerging market rally that we're seeing at the minute.
Well, Stuart, thank you for your insights. That's all from me. But for all the latest financial news, do keep clicking back to Dukascopy TV.